Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena. This is a show where we take you through all the buzzers in trade, why they are buzzing on the back of news flow and on the back of technicals. But first up, let's take stock of how the markets are really shaping up today. If you look at the market on the Nifty, we're pretty range bound. In fact, we are trading within the previous session's range, a very tight range of 22,500. There on your screens, it's absolutely flat right now in the red. Broader indices are seeing deeper cuts. The sell-off continues in the broader markets. Mid-cap is down 1.2%. Small caps are also down 1.8%. So sharper cuts coming in as far as the broader markets are concerned. Bucking the trend is Nifty Bank. That's trading above its previous session's range. In fact, it is trading in the greens with gains of almost 0.5% there on the screen. And it is on the back of the move, that big boost that RBI has given to the liquidity in the system, by cutting the weights on the MFI loans and the banks lending to NBFCs by 25 basis points. And for banks, it means lower capital needs. And for NBFCs, it means easier and cheaper funding. So on the back of that, banks and financials are really holding up in the green. These are the only two sectors that are really holding it out in the green. All the other sectors are in the red. From the financial services, look at Shriram Finance. That's trading with gains of almost 5%. Chola Finance, that's up 4.8%. Bajaj Finance and Bajaj Finserv also continue their winning streak. They're trading with gains of more than 2.5%. We also have SBI Card that's up almost 2% in trade today because on the back of the news flow that's come in. Nuvama expects big gains coming in for Chola and SBI Cards. On the back of that, they are also buzzing. But largely, that's how the market is shaping up. But to get you more details of what all are the other stocks that are in focus today, let's get on board Ashish Kyal, who's the founder and CEO of Wave Strategy Advisors. On the technicals and from our research team, we are joined by Gaurav. Hi, good afternoon to both of you. Thank you so much for joining us. Well, first up, coming to you, Ashish, you have picked up Chola Finance, and Chola Finance is in focus today. In fact, the entire financial basket is in focus today on the back of that big stimulus that's coming in. Chola Finance is up 4.8% because of that. What are you seeing on the charts for the counter in the near term?
Hi, afternoon to you and all the viewers. If you look at Chola Fin, we can clearly see it has managed to give a very strong breakout in today's session, where the broader market was underperforming over past 2-3 weeks. We can see it has been outperforming now. So the overall trend looks to be positive for Chola Fin. One can create long positions here, expecting a target of 1500 on the upside, and on the downside, one can maintain a stop loss which is going to be around 1380 levels.
All right, that's Chola on the charts, a breakout coming in on Chola Finance. But let's move on to Ultratech Cement and see what's happening as far as Ultratech Cement is concerned. Big news there as well. Ultratech Cement has forayed into wire and cable segment. Now, the company aims to extend its footprint in the construction value chain, and the initial capex is, for the next 2 years is likely to be around 1,800 crore rupees. Now, the funding, the mix of internal is going to be a mix of internal accruals and a mix of borrowings. Also, they plan to set up a plant near Bharuch in the state of Gujarat. The plant is expected to be commissioned by December 2026. Now, a couple of brokerage notes have also come out. It is currently trading with cuts. It has given up those morning gains, is currently down 5%. Ultratech Cement brokerages, Morgan Stanley on Ultratech is maintaining its overweight call, and they set the target price to 13,650 rupees. Jefferies is maintaining a buy call again with the target price of 13,265 per share. CLSA says that for the wire and cable customer base may be the same, but the channels for the sales and distribution is different, so they don't see much of an impact coming on the industry. So that's largely what the brokerages are saying about this move. But nonetheless, Ultratech Cement is down and out right now, reeling under selling pressure with cuts of 5% as we speak. But let's move on then to wires and cables segment. Gaurav, I was talking about it. Tell us, what does all the brokerage notes say about the wire and cable segment?
Well, yes. When we look at this segment now, obviously when the new competitor is coming, this segment is actually leading, because when we look at the stocks at the like of around Polycab, Havells, we are seeing some sharp downfall. And the reason being that when we look at Ultratech Cement, now Jefferies is saying that the Ultratech Cement's announcement of putting capex of around 1600 crore rupees in the next 2 years can be a game changer from here on in terms of competition. What they're saying is that if we assume 4 to 5 times asset turnover, Ultratech's revenue can be estimated at around 5 to 7% of the total cables and wires estimates in FY29, and that is the reason why we are seeing some pressure coming up in the stocks like KI Industries and Polycab. At the same time, when we look at brokerages, they are not being very bearish about the competition. What they are saying is that the competition will not have much impact on Polycab versus housing players, and their key pickup still remains as Polycab. But as a result of this new announcement, we are seeing some pressure. On the other hand, when we look at Morgan Stanley, they have also maintained maintain some kind of bearish note. What they're saying is that a new competition can actually bring some kind of difference. It is actually a surprise, but not concern when we look at cables and wires overall. And there are differences in terms of cables and wires and paint sector is what they're saying. But all in all, when we look at industry and the market, it has taken the news in a negative way. Currently, both these stocks are actually under pressure. So definitely watching out on what happens in the entire industry in coming days.
Absolutely, Gaurav. Cables and wires to be watched out for. Big competition entering the space. And on the back of that, Polycab is down and out, almost 17% in trade. But we also had Anil Gupta, who's the CMD of KEI Industries, sharing his view if there will be a heightened competition seen in the wires and cable industry, as of course Ultratech forays into the industry. Let's go across and listen into what he has to say about this.
Our preparation is clear that first, our company is debt free. So it is the cost competitiveness which plays. We are competitive in our operations. We are very, very competitive in our raw material procurements, and our cost control is exemplary, and also our financial cost is zero. So even if Ultratech has a lot of cash, but we also do not borrow. So I don't see any reason to get feared, and nobody can take our market share or even our growth.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we're getting you some more buzzers in trade. Stay tuned. Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today, either on the back of news flow or on the back of technicals. And one such pack that is entirely buzzing in trade on the back of that big RBI stimulus coming in, the banks and the NBFCs, the only two sectors that are really holding out in the green. Gaurav, take us through the details of that and what is going to be the likely impact of this news on banks and NBFCs.
Well, yes. As you rightly said, banks and NBFCs both are in focus today. And if we look at Bank Nifty, it is also up in trade today. When we look at some of the stocks in the likes of Bandhan Bank, EU Small Finance Bank, RBL, they have seen a gain of more than 4%. While on the other hand, when we look at NBFCs, we are seeing Shriram Finance, Chola Finance actually up in trade. And the reason being that now RBI has reduced the risk weights for banks lending to NBFCs, and at the same time bank lending to MFI segment. Now this will have two impacts. First is on the bank's CET1 ratio, and second is on the NBFC's availability of funds. When we look at CET1 ratio, some of the banks who have higher exposure to NBFCs in the like of Bank of Baroda, Federal Bank, PNB, SBI will see CET1 accretion of around 30 basis point or more, and at the same time banks with high MFI exposure will also get benefited. Let's not forget that Bandhan Bank, IndusInd Bank were some of the counters where we have seen some pressure coming up for the last few quarters because of the high MFI exposure. But now that the risk weightage has decreased, what we can see is that CET1 accretion somewhere in the likes of around 160 basis point for Bandhan Bank and around 30 basis point for IndusInd Bank as per CLS's estimates. Let's also not forget that this will also ease up some of the pressure which is coming up on NBFCs in terms of funding. NBFCs will also be in better position to negotiate for lower borrowing rate, and that is the reason why we are looking at some of the NBFCs in the likes of Mahindra and Mahindra Finance, Shriram Finance. We are seeing some kind of uptick in these counters. Now let's not forget that RBI has been proactive in pushing the liquidity for the last few quarters, let it be the rate cuts and some of the OMO activities, and with this they are again pushing the liquidity in the system, and that is the reason why when we look at entire segment, we are seeing some positive upticks coming up in the entire sector.
All right, that's banks and NBFCs, but really moving on from there, it is now time to get a mood check on India's financial sectors. Where should you really park your money? Should it be the banks? Should it be the NBFCs or the MFIs? Where should one park their money? And let's go across and listen to the take coming in from Bernstein's Pranav Gundapalale on the same.
A reversal of the tightening moves that RBI used over the last 12 to 18 months. I think things are getting better, and therefore we are probably off the worst point in terms of growth. We should start seeing an improvement in growth. And in terms of a pecking order, we still prefer the large private sector banks, with HDFC, ICICI and Axis being the top picks for us. The reason being that while the overall liquidity environment improves, we don't see a rapid growth in the consumer credit space. So we prefer lenders who have a more diversified portfolios, and hence the preference for the large private sector banks.
All right, moving on then. Ashish, you picked out SBI cards for us. Another name that's buzzing away in trade on the back of that big RBI stimulus. And, Nuvama also says that it's a big beneficiary apart from, Chola and 5-Star as far as this news is concerned. It is up 2% in trade today. But really, what are you seeing on the charts for this one?
If you look at SBI cards, it has been outperforming since many weeks now. Instead, from the start of January, the stock was quoting around 650 and now it is at 860 levels. It's not very often that you see stocks like are moving higher, but this stock has bucking the trend and is continue to move higher, forming higher lows. So the trend for SBI card is positive. We can expect a move towards the level of 900 on the upside, and on the downside, one can maintain a stop loss for the stock at 826 levels.
All right, moving on then from SBI cards to another counter that is in focus today, and that is Alkem Labs. Now, this one is a brokerage candidate. Now, Nomura has upgraded the stock to buy from an earlier neutral stance, and the target price from that is 4,530 rupees. They've cut the target price though. Nonetheless, Alkem is still trading with gains of 0.5%. They feel that the valuation discount to staple companies has narrowed significantly over the period. They expect Alkem's domestic growth rates to improve in FY26 on a relatively low base. Now, this is likely to be supported by better pricing and volume growth. Now, they expect Alkem to exit or significantly lower its investment in the US generics. Now, Alkem's biologic CDMO facility in the US can also present an upside to the current expectations, given the US policy on encouraging domestic manufacturing. On the back of that positive brokerage note coming in on Alkem Labs, that's up and away in trade with gains of 0.5%. But coming to you again, Ashish, you picked out Angel One for us. Tell us, what are you seeing on the charts for this one? I mean, as I can see, it is declining in trade today, at least with cuts of 1%. In the last 6 months also, this one has been in a corrective phase. So from here on, how do you see this stock moving now?
If you look at Angel One, I think the overall trend for the stock is bearish. It has failed to show any kind of a positive attempt, and it's now on the verge of breaking down below 2150 level. So it's just trading around those zone. And if it breaks below 2150, I think the stock will resume the downtrend. The overall tone remains sell on rise, and we can expect it to move towards the level of 2000 on the downside. And on the upside, 2320 becomes a very important hurdle.
All right, moving on from Angel One on the charts, we'll move on to the next counter. I'll come to you, Gaurav. You picked out the Titagarh Rail for us. A bullish brokerage note coming in on this one as well. Tell us, what does the brokerage note say?
Well, in fact, however, it looks bullish for viewers because they have maintained their overweight rating. What has happened is that they have actually cut the target price to 1,090 rupees versus what it was at 1,300 rupees. And the reason being that execution risk is what they are seeing in the Titagarh Rail system. As per Morgan Stanley, what they are saying is that the freight inadequate wheels set by Indian Railway can constrain the Q3 offtakes, and at the same time, when we look at passenger execution, they are seeing some kind of slowdown. In terms of Vande Bharat, it has been delayed almost by 9 months, and that is the reason being that change in the design plan, and that is the reason why they see some challenges coming up in terms of execution. Lastly, what they are also saying is that when we look at passenger segment, the company has won no orders in specifically since October 2023, and that is the reason why when we look at the earnings estimate, now Morgan Stanley has lowered their earnings estimates almost by 14% over the next 2 years. And lastly, they also have mentioned that the execution of Ahmedabad Metro will also begin in Q1 FY26. So yet another delay in the project, and that is the reason when we look at stock performance also, it is under pressure, down 4.5%. So definitely watching out on this counter on the back of the bearish note coming up from Morgan Stanley.
Well, all right, that is the note coming out for Titagarh Rails. It's a rather bearish note because they've cut the target price for that particular counter. But we'll move on to the next counter that is in focus today, and that is Jubilant Foodworks. That counter is in focus today because, of course, this is going to be Jubilant's maiden analyst meet. It's the first analyst meet that Jubilant will be holding, sharing rather ambitious targets for the next 3 years. They're eyeing an expansion of 700 new towns. In fact, Jefferies has come out with a note, and they're maintaining a buy with a target price of 1,000 rupees on Jubilant. That is trading with gains of 1.2% right now. They're set to host, of course, it's their maiden analyst meet on 27th of February, which is today. And also industry trends and outlook is something that we have to watch out for in the QSR space. The issues ailing the dining business and the steps to revive it. That is what Jefferies is watching out for. Also, the risk and opportunities of the food platform aggregates like Zomato and Swiggy, waiting and watching out for the word coming in on that. And also the pizza competition, especially as far as the offerings and the prices are concerned, that is also something that we are watching out for. And further clarity on M&A and insight on the journey of Poppy is something that we will be watching out for as far as Jubilant Foodworks is concerned from the maiden analyst meet. So on the back of that, Jubilant is up and away 1.2% in trade today. But with that, we have come to an end of this show and all the stocks that are in focus today. I'll thank Gaurav and Ashish. Thank you so much for joining us today. With that, it's a wrap on this edition of Market Fatafat. I'll take your leave. Thank you so much for tuning in.
Think equity. Think Motilal Oswal.
If you like this video, then like, share and subscribe to ET Now.